Hey everybody and welcome back to another video. This is How to Invest, Spencer here, and this one is going to be a little bit different. This one is going to be an update video on Tesla stock, and I typically do some of the financials and numbers on the stock and the technical analysis, but this one is going to be a video analysis of a video that came out just about a week ago from a Tesla bull. He is pretty infamous on CNBC. We can see here that this video only has 31 likes as opposed to 135 dislikes on only 5,000 views. And he is debating a $150 price target in this video. So that's a very, very big ways away from an article that we will get into later on. But Jefferies just boosted their price target to $950. We can see here. And Jefferies, if you guys are unaware, is one of the most well-renowned kind of research funds that set a lot of price targets, and they do a lot of financial banking and investments. But without further ado, let's get right into the video.
Well, shares of Tesla moving slightly lower following its annual shareholders meeting last night. Along with plans to move its headquarters from California to Austin, Texas, CEO Elon Musk also noted a delayed production timeline for its highly anticipated Cybertruck, as well as the global chip shortage impact on the company. Shares are at $790, down about 0.4%. What all this could mean for the stock here going forward, let's bring in Craig Irwin from Roth Capital Partners. Craig, I understand you have quite a low price target on Tesla compared to where it's trading now. Explain why you are estimating it should be $150. It's way lower than $790.
Yeah, so, what's the market cap now? Something like, 770 billion dollars. That's equivalent to basically the sum of the entire rest of the automotive sector. To be buying it here, you have to believe that there's all sorts of new opportunities and new ventures that are going to make a lot of money for the company off on the horizon, and nobody's going to be successful in EVs. I think that that's a very aggressive assumption. I think Tesla's a great company, but I saw survey of chief investment officers not too long ago showed that 70% of them would much rather invest in General Motors and Ford as a way to play electric vehicles than Tesla. And then, frankly, I've been saying for a long time, I think people will end up being much better off in small cap. There's some great companies there. Some of them have had troubles, fairly normal standard practice, actually, when these companies come out. There's a lot of learning, but there could be some very big long-term winners. Just like Tesla's become.
Why then do you have the stock rated a neutral?
Because I firmly believe that this is actually a good company, and there's specific levers they can pull for growth. The first of those is India. I've been talking about India for almost a year now, or actually maybe even a few months more than a year. I understand Tesla has actually gone down to select a facility there. They've not announced it yet. There have been sort of hints and tweets along the way from Mr. Musk that it's coming. India is going to be just as important as China. It's going to be a couple 100,000 vehicles a year in not too many years. Second thing is the mini car. Mini cars are a fantastic fit for the European market, probably the India market, and maybe even China as well. That's a vehicle that we expect not too far off on the horizon. I wouldn't be surprised if it was made in Germany. Those two single levers can actually give Tesla quite a lot of gas as far as deliveries units over the next couple of years. Would I short it on that? No. I've been saying for a while that I think the one thing that pushes this sort of over the top or pulls the blush off the rose is Apple. Apple's going to launch, I believe, in 2024. So, sometime in 2023, we should start getting data points on that.
With Verizon, there's a...
All right, so that was the video. It was pretty short, but he made a lot of bold claims and assumptions and just a lot of good talking points in the video. So first off, I just want to point out, in the beginning of the video, he can't even keep the smirk, and he's almost cracking up at the thought of Tesla going to $150 or $150 price target of Tesla. He's almost literally cracking up. You can see grinning ear to ear. But secondly, he goes on to say that for Tesla to assume its current market market capitalization, they would have to make a lot of deliveries on a lot of promises that they've made and business opportunities. The first of being India. So India is something that I've actually been talking about too as well. And I've just said that it's going to be a very, very bullish opportunity as other vehicle makers such as Ford have failed to really get a foothold into that country. But this will hopefully be a different venture for them, considering they are a newer, more innovative company as opposed to an older company such as Ford, which were just kind to copy and paste a lot of their models from the United States, Mexico, North America, and just paste it all around the world. And they found out that it wasn't as easy as it seems to be. But Tesla has been operating and shooting on all cylinders. They have a gigafactory in China, which a lot of people were very, very skeptical about. And I would bet Craig Irwin was one of those skeptics, saying that they wouldn't and would never be able to operate in China with the not only stiff competition, but a lot of the bureaucracy and the politics that goes on there, or lack thereof. But the third thing that I want to get into is that he said that Tesla has to be the only winner in the market for this to succeed. And that is just flat out not true. I think on the minimal basis by 2050, if they have even like a 0.25% market share, 25% of all EVs, by then I would assume or hope that the majority of total vehicles are EVs. If he had a 25% market share, that would be phenomenal, because we know that the amount of players that are going to be in this field. A lot of people assume that a lot of the traditional ICE vehicle makers such as Toyota, Ford, GM, and all the others will be in this race too. And of course, there will be new ones too, such as Lucid, which is a very, very big up-and-comer. And I just don't see that Tesla has to have majority market share to achieve a lot of their market capitalization. And the biggest reason is due to technicals. So I think a lot of the basis of his $150 price target is due to, typical ways to value a stock, such as price to earnings. And if we go over to Tesla, we can see that they're worth $844 billion. I think Ford's worth maybe $50 billion and GM's worth maybe $60 currently. They may be, I think they're around there. But either way, they're over 10x the worth of those other traditional automakers. If we look at some of the advanced metrics and go over to their price to earnings ratio, so their trailing is very, very high at 410, and their forward is still very high at 114. Just to give you a gauge of the market average currently, the S&P has an average of 23 for most companies on a forward price to earnings ratio. But I will say not everything that he said in the video I will completely disagree with, and he did make some good points. Like I said, India is going to be a very, very good money maker for them. And he also said that there is a good amount of opportunity in small caps currently, which I agree with too. I've made videos on Lucid, which is by no means I would say small cap, because I think it's almost above 40 billion or in the 30 billion range. But it's substantially smaller than Tesla and has much more room to grow if they are able to achieve a lot of their goals that they've set. There's others such as Fisker, which is very cheap compared to even just Lucid. And then there, like he said, the traditional automakers, which Ford and GM, which I believe in too. I've made videos on them saying that I'm pretty bullish on those too, because in general, I'm just bullish on the EV trend. I think that there's a lot of money to be made, and I think it's going to be very, very sustainable over time, because I don't think it's going to be very easy to build out the infrastructure for EVs and get people to switch their mindset like in the snap of a fingers. I think that people will switch to EVs when it's beneficial for people to switch to EVs. And I think for most people currently, it's either too expensive or just doesn't make sense due to the charging situations, because it either takes too long, or they don't have anywhere to charge, or they have a place to charge. It's in a public area, and it takes too long, and it's usually too busy. The reasons are endless, but for a lot of people, having an electric vehicle just isn't very feasible, especially if you live in a city or don't really have a garage or have chargers near you that are readily available. So the next thing that I wanted to point out was that he said this still is a really good company and that it's a neutral rating for him by his company, or it might not be his, but by, I think it was Roth Capital. Yeah, you can see it over here. And that just means that it's a hold and that he wouldn't short the stock. So this means that he understands that there is a good amount of buying pressure and there's a very good upward trend currently. If we go and look at just the quick chart, we can see that over the past 6 months, the stock is almost straight up and to the right with, obviously some kinks in the way. But he's too afraid to short the stock because he knows that not most of the time, but a lot of the time, especially with higher growth companies and story stocks, they don't trade off traditional metrics, and they trade off of kind of the hype and the technicals that are at play, and what people are willing to pay for the stock is really what it comes down to. And currently, people are willing to pay up a big chunk of change for Tesla because they know that it's going to be able to grow substantially over the next coming decades. But I wanted to end the video with the Jefferies price target that came out today that I mentioned earlier. So it just came out today and is a big reason why it jumped over 3% today, over 24 points. So it says Tesla stock climbs to an 8-month high after Jefferies boost price target. Shares of Tesla extended their recent surge of 8-month high on Friday after Jefferies analyst Felipe, I'm going to butcher this last name for sure, but Hoichus, I'm not sure, but he says he raised the price target and earnings estimates because they did beat deliveries, which is obviously most of their earnings because they are a car maker. Saying concerns over demand in the EV leaders in China have been put to rest because there were significant fears that either the Chinese people had started to value the homemade companies more, or that the government would even try to put some kind of hindrance on the company, whether that be a form of tax, making it more expensive, which there already are. Coupons are basically discounts for the China-made vehicles such as NIO and XPeng and Li, but there were maybe fears that there would be even more in tariffs on that. But it goes on to say that the stock jumped 3% on its 5th straight daily gain. Noted that a lot of times when the Tesla had run in the past, I think it was they had 22 straight days of gains. So keep an eye out. If we do see continued green, then it might be a larger upward trend than we may realize currently. He goes on to say that they raised the stock price to $950, which is about 7.5% above the January 26th close of $883. From $850, his research and analysts suggest higher capacity ramp, sustained demand. He reiterated a buy since August. Now it has run a bit since August. If we look at the chart, there was the most consolidation we've seen since then. Ever since then, it's been straight up. If we look at the end of the article, he raises 2021 estimate for earnings from $5.59 or to $5.59 from $5.12, so about half a dollar, and the revenue from $54 billion. So they raised it by about $500 million, and the EPS to be $5.30 and the revenue to be $51. He said Tesla hasn't been immune to supply disruptions, and it outperformed its peers in sourcing chips. Yeah, the big problem is they would be able to deliver much more vehicles and would probably hit the $1 million vehicles delivered, which was their goal for the year. But As everyone knows, chips have been in very, very short demand and are very, very hard to come by. So he's saying that although there is a chip shortage, they've been able to get most of the chips they needed and almost make their goals of making about a million deliveries on the year. But like I'm sure many of you guys know that I'm a very, very big Tesla bull and a big shareholder, and either way, I think Tesla stock will be going higher. There obviously was better buying opportunities than right now, but you know, it may never be a bad time to buy if this stock might go straight up to $9.50 at the price target from Jefferies, because as we've seen, it does tend to like to go up straight and to the right. But if you made it this far into the video, thank you very much for watching and have a great